Hello. Introduce myself. My name is Mohammed Angga Fernanda, from Class MNJ 23A, NPM 234-11050. Business Law, Financing Institutions in Business Activities. Business law plays a pivotal role in regulating and facilitating the complex interactions between various entities in the world of commerce. One critical aspect of this legal framework is the regulation and operation of financing institutions, which are indispensable to business activities. These institutions, which include banks, leasing companies, venture capital firms, and other financial service providers, serve as essential intermediaries, bridging the gap between capital requirements and the availability of funds. Their activities are governed by a combination of national laws, international regulations, and contractual agreements, all aimed at ensuring transparency, fairness, and economic stability. The role of financing institutions in business. Financing institutions are at the core of any thriving economy, providing businesses with the financial resources needed to initiate, expand, or sustain their operations. By offering credit facilities, loans, and other financial products, these institutions enable companies to acquire assets, fund research and development, manage cash flow, and seize market opportunities. For instance, a manufacturing company may rely on bank loans to purchase new machinery, while a startup may turn to venture capital firms for funding during its growth phase. Leasing companies also play a crucial role, allowing businesses to use high-value assets without the burden of full ownership costs. Legal framework governing financing institutions. The operation of financing institutions is subject to stringent legal and regulatory frameworks designed to maintain the integrity of financial systems. In most jurisdictions, central banks or monetary authorities oversee the activities of these institutions, enforcing regulations related to capital adequacy, lending practices, and consumer protection. Laws such as the Basel Accords provide international standards for risk management and financial stability, while national laws address specific concerns, including interest rate caps, collateral requirements, and dispute resolution mechanisms. Contracts between financing institutions and their clients are another cornerstone of legal governance. These agreements typically outline the terms and conditions of the financial relationship, including repayment schedules, interest rates, penalties for default, and the rights of both parties. It is imperative for businesses to thoroughly understand and negotiate these contracts to avoid potential legal disputes and financial pitfalls. Challenges in financing business activities. Despite their critical importance, financing institutions and their clients often face significant challenges. For businesses, securing financing can be particularly challenging due to stringent eligibility criteria, such as creditworthiness assessments and collateral requirements. Small and medium-sized enterprises, SMEs, in particular, often struggle to access affordable financing, which can hinder their growth and competitiveness. On the other hand, financing institutions must contend with risks such as loan defaults, fraud, and economic volatility, which can adversely affect their profitability and sustainability. Legal disputes arising from financial agreements are another common challenge. Misunderstandings or disagreements over contractual terms, non-compliance with regulatory requirements, and instances of bad faith can lead to protracted litigation, undermining trust between businesses and financing institutions. To mitigate such risks, many jurisdictions promote the use of alternative dispute resolution mechanisms, such as arbitration and mediation, which are often faster and less adversarial than traditional